Hi guys, welcome to year 2 of my financial independence journey. If you're new, watch the playlist to get up to date because today we're just going to be talking strictly numbers. So one of the principles of financial independence is to invest your money in the stock market. So everything that I'm going to be talking about today is in my investment portfolio. Now, the assumption is that the investments that you have will grow over time because the stock market increases over time. So that's a factor, but as you guys know, the stock market for this year to date has been down. In fact, last time I checked, it was down 24%. And then last year, for reference, the stock market was up 28%. So as you can see, it's kind of a mismatch and the gains aren't really there for this year. And because of that, I've lost a good amount of money to that fact. So I just have to remind myself that this is a long-term game and to not get caught up in the emotional things. I haven't changed my routine in terms of investing. I'm still investing a set amount every month, continuing forward regardless of the stock market, but it still is a little jarring to see your account balances go down. So as we get into this, let me know what you guys were expecting in terms of numbers, knowing what I just said before, because I myself was surprised when I ran the numbers. It's interesting when you're like going through your life day to day and like I'm checking my investment portfolio and then I see the number. It feels like I'm treading water based on how the stock market is going. So because I'm losing money but I'm putting in money, like it feels like I'm always at the same balance. But as you'll see as we get into the numbers, that wasn't the case. All right, so we're just going to be doing a comparison from my last update, so last year, to what I have going on this year. It's been exactly 12 months, so this should be pretty revealing. One thing that I will say is that last year I had 10% bonds in my stock portfolio, but I got rid of all my bonds this year and I have 100% stocks. Now, as I've said before, 99% of my portfolio is in exchange traded funds, but I did start to buy a few $100s worth of individual companies, and you'll see where I put them in a few. So because I like to invest from tax advantage to least tax advantage, we're going to start with the most tax advantage, which is the 401k/403b. So this account is pre-tax, and the money that goes into this account is from what I contribute every year, and since I've started my financial independence journey, I have invested the maximum amount. So for the year 2022, it's $20,500. So that is what I will be investing, and then other contributions are the employer match, then of course the returns if there are any in the stock market, and then dividends. So let's see the numbers. So last year I had $104,312 in this account. This year I have $131,974. So that is a difference of $27,662. So that account, it would appear that it went up from last year. Whether that the amount that is the return on investment versus what I put in, that I actually don't know, but I'm glad that that account is up. As you'll see, other accounts coming up did not have the same fate. So the other place that I have money stashed away is a health savings account, and that is an account that you can contribute to if you have a high deductible medical insurance plan. Now, I had this account from my prior job, and I currently don't have a high deductible medical plan, so I cannot contribute to the account anymore. So this account I made no contributions to in the last year. So last year I had $9,218. This year I have $8,225. So that account did decrease by $993. So a negative rate of return of around 11%. So this is the only account that I didn't contribute to. So you can kind of get to see the rate of return from last year and this year. So that's kind of enlightening, I feel. The other ones I contributed to, so the degree of rate of return isn't as discernible just by looking at last year's numbers and this year's numbers. But if I go into the individual accounts, like they do give me like a rate of return, but the rate of return hasn't been great, like I said. So next up is the Roth IRA, and that is an account that you contribute to with after-tax money. So there is a maximum every year, and for the last few years it's been $6,000. So I definitely contributed $6,000 last year. But let's see how that played out in the numbers. So last year I had $41,593 in that account, and this year I have $42,670. So that is a difference of $1,077. So as you can see, I put in 6,000, but I only had a difference of 1,000. So there was some loss there as expected. And then the last place that I like to put my money is the taxable brokerage account. So if you're doing the whole tax advantage thing, this is the last place that you would invest. So this is where I put all my extra money. So if I have a tax refund, or I get some lump sum payment, or just like a monthly amount that I deduct from my paycheck, this is where that money goes. So as I mentioned, most of the stocks that I have are in exchange traded funds, but this account I allowed myself to buy a few individual stocks, and those are stocks to like various companies that I feel are quality companies and that are going to be around for years. They're all companies that you're all familiar with, like name brand companies. So those are the companies I buy. I don't do anything speculative with these companies because these are buy and hold investments. So it's important that the company is on a good trajectory and is going to be around for a while. So that's that. Now let's get into the numbers. Last year I had $64,392, and this year I have $167,681. So that is a difference of $103,289. So that's a significant difference from before. And as I mentioned previously in other videos, this is the account that I invest particularly aggressively in. So there are a lot of growth stocks or growth exchange traded funds in here. So that helps to make up the difference. But at the same time, it has the potential to lose a lot of money in the event that the market goes down. But I am up from last year, so I'm happy about that. Now, in terms of the big picture, which is the most enlightening one, I feel, we're just going to talk about how much money I had last year compared to this year. So last year I had $219,515 in my financial independence net worth funds, and this year I have $350,555. So that is a difference of $131,035. So when I was first going over the numbers, or thinking about going over the numbers, like I didn't know like what to expect, because like I said, I like felt like I wasn't making any progress. So it's nice that I decided to like do these updates with you guys, because then I get to see that yes, I am making progress, and like all of this hard work isn't for nothing. So I'm very excited about that. That is a significant increase, and I actually need to look back to see what the difference was in the prior year, but I believe it was around the, actually I don't know what it is, so I will look it up, and just for my own satisfaction, and you guys are free to watch the video yourself to see what the difference was. And overall, I am happy that my account is up and more than it was last year. However, I do know that if the stock market had kept on the same trajectory that it had been in 2020 to 2021, then I would have had more money than this. In fact, I know that my stock portfolio was up about $40,000 more than this a few months ago. So yes, I have lost money, but I have to, like I said, think about the big picture and be grateful for what I do have. So yeah, that is gonna be it for this video, guys. Let me know what you think about this. If you're on a financial independence journey, then definitely comment below. Let me know how you're doing, because I love, you know, the community of like reaching goals together. So yeah, until the next video, I'll see you guys. Bye bye.